So the chances are that you're self-employed and you're looking for a self-employed mortgage. Different ways we can use your income, and there are different ways we can try to maximize and help you achieve the goal of purchasing a property or refinancing a property. As a self-employed person, I'm a 50% owner of Niche Advice Limited. I know what the challenges are like. So let's talk about some of the things. So if you're a self-employed sole trader, generally the lenders want to see 2 years accounts, and they'll work off the net profit. So they don't work off the gross profit, they'll work off the net profit. So that's important. Now, there are some lenders that will work the average of the last 2 years. So I made 50,000 this year, and I made 20,000 last year, and they'll take an average of that. And that's where the norm is. Now, there are some specialist lenders that will take the latest year. So literally you had a pretty bad year because you set up last year. However, this year you've actually flown and you've done really, really well. Well, it makes sense for you to make, to make the affordability work on the £50,000 rather than the £20,000 and average that out. So there are options around that. There are specialist lenders that could do that. There are other lenders that will say, okay, well, let's have a look at your last 3 years accounts. And if it's a stepped rate, first year you made £10,000, next year you made £30,000, this year you made £60,000. Because it's an upward trend, they can work off the latest year's figures. So that's very important, okay? So sole traders, and depending on the type of occupation you've got, there are different rules around that. There's CIS workers, how are they seen? There's, your normal locum workers. Now there's your contractors. Now, if you're a contractor, a little bit different because you're probably on a daily rate. And there are lenders that will work off a daily rate, which is your daily rate times 5 times 46 or 48. So, and you don't necessarily have to go by your tax returns or your accounts. So there are advantages if you're on a daily rate. You could be a sole trader, but you could also be on a fixed term contract or a contractor as such, okay? Not on a daily rate. There are rules around that, how long you've been in a contract. Do you have industry experience, or have you just started within that industry? Depending on those rules, we can identify which lenders are suitable. There are lenders that don't have minimum time frames, for example, so it could help you. So it's not just about, oh, what's the best rate between this bank and this bank? It's all to do with criteria when you're dealing with self-employed applicants, because everything's a little bit more different. Can they work off accountant certificates, for example? Do you have to show them your tax returns? All of those things matter. Now, let's talk about limited company, because a lot of my clients are actually limited company directors, right? Could be husband and wife, or it could be with any other directors. Now, when it comes to that, there is more scope in regards to your income profile, because the average normal lender will take your salary plus your dividends, and they average the last 2 years. So that's the majority of the high street banks. However, there are lenders out there that are on the high street, so you don't have to go specialist, that will work off your net profits. Now, that could be a big difference. Now, you could have made 100K, but you could have not taken that money out because you didn't want to be seen as a higher rate taxpayer. So you left that money in there. Well, you've made a profit, so you could use that profit, not necessarily your salary and your dividends. So you could use your salary plus the net profit, which is quite big, okay? Big difference. So a lot of people that are earning a lot of money, they tend to go down that route. It could be quite good for them from a tax perspective, because they're not essentially seen to be drawing all that money out and paying lots of dividends tax. Okay, so there are options around that. And again, we can go by latest year's figures, so we don't have to average that out. So it really does help those people that are company directors. Okay, there could be people that are sole traders and they've incorporated. Okay, so they don't really want to wait 2 years because they've got the history of being in trading, however, not under a limited company. Okay, so there are lots of options when it comes to self-employed mortgages. It's not just about the rate, it's about the rate as well as the criteria, as well as the type of income they can use. Most self-employed people may have a couple of businesses, for example. Will they take 100% of all businesses? How do they view the background businesses? Okay, you may have property income in the background. How does that work? Will a lender take 50%, 60%, or 100% of that income? How will they see pension contributions? Some people are putting in a lot more pension contributions into their accounts. How does lenders see that? Can that be used as the income side of things? So anyway, there's lots and lots there. I hope I've demonstrated that I understand self-employed. As a self-employed person myself, I understand how this stuff works, okay? And what I will tell you is, I will work with you directly, and we can then, once we get your form in, and you can click on a button and we can book a call in, and once I get your form in and I've had a discussion with you, I'll give you a blueprint of where we're going to go, how we're going to do it, which mortgage lenders we're going to approach. We'll have a look at your credit profile. We'll look at your affordability. We'll look at what documents you need, what documents you need to have a conversation with your accountant, for example. So you have a blueprint, whether you're looking to buy now or refinance, you have a blueprint of where you are, what you can and can't do. Okay, there's no point wanting £500,000 mortgage when your affordability is only £300,000. So I might as well put you out of your misery now and tell you this is the score. So if you want someone who's honest, who's going to work on your behalf, fill in the form and I'll get in touch with you. As a mortgage is secured against your property, I'm obliged to tell you that you could get repossessed if you do not keep up mortgage payments. Niche Advice Limited, my company, is also authorised and regulated by the Financial Conduct Authority.